Yeah, Kelly, we're long the stock here, long from lower, which is nice. So we're going to hold through the report. And this is a name that, we think can be a real leader into the future, assuming they continue to do the right things each quarter. But they're still 75% off 2021 highs. They've got a decent balance sheet. It's rich from a valuation standpoint, 42 times forward earnings, but their growth is attractive, 60%. So ultimately, we want to see what the company has to say about their quarter. Obviously, we want to see how free cash flow is, how they're compounding book value. This is a name, as I mentioned, we're still long. We would be a buyer of pullbacks, assuming the report is decent.
All right. Well, are you a buyer regardless, though?
I mean, we want to own this name over time and accumulate a position.
Yeah, but I know you were saying a lot of people look at that forward PE and say, wow, but if you can get it any lower than here, even better. All right, let's move on. Thank you, Steve. We'll talk about Warner Brothers Discovery, whose shares are up 70% in the past couple months. All these stocks are rebounding after their difficult 2022. CEO David Zaslav, is the turnaround strategy working? Julia Borston is here with that story. Julia?
Well, there are a couple of key things we're watching here. And the first one is the question of cost cuts and his whole effort to deal with the company's debt. Now, David Zaslav has done meaningful cuts already. I think there are going to be some questions on the call about whether there are more cuts coming and also what his strategy is going to be around content investment going forward. Second key area to watch, the ad market and macro pressures on the company. This is a company that's already seen advertising declines in the third quarter. The question is how much we will see ad pressures continue into the fourth quarter and what his outlook is for the ad market over the rest of this year. And then the third area to watch is streaming. This is a company that's really focused on growing its streaming business and combining the Discovery and the HBO Max streaming business. We're looking for some insight onto when that's going to happen, what that's going to look like, how much that combined bundle is going to cost. And in the meantime, we're expecting the company to add about 1.5 million streaming subscribers. So some focus there as well sort of the roadmap on what's next for the streaming business. As David Zaslav has said, he also wants to protect the theatrical movie business. Kelly.
Absolutely, Julia. Thank you. Quinn, people are looking at that 135 forward PE, and I don't even know if that's exactly right because a $15 stock implies the question is going to be about profitability, period. And that's been plaguing this company since creation.
Yeah, this is interesting because it's got a tangible book value of 20. The stock's trading at 15. The turnaround so far is working, and the stock is showing that. But we've missed this. We've just missed it. We thought it was a good opportunity when it was trading lower. We waited for a pullback that never came. Now I just can't chase this name here. I really now have to watch quarter by quarter. Still a tremendous amount of debt, but they also have $2 billion on the balance sheet. So it's not for me here. I'm going to hold off, but hopefully there's a better opportunity in the future.
Yeah, and maybe to those who did get in, when it was single digits, you're thinking maybe now's the time to take those profits?
For sure. That's what I would definitely be doing here.
All right. We'll see. Julia, as I mentioned, we appreciate it, and we'll turn to Carvana, the last one of the bunch today. It's had a monster run so far this year, but man, what a couple of years it had before that. There are a few things to consider about the fact that we've doubled since Jan 1. Short interest is 61% of the float. It's nearly 94% off of its weekly high of 52-week high of 107. I think it was even much higher before that. Anyway, Phil LeBeau, you tell us the story here. What are people expecting in this report?
Kelly, two things that will get a lot of attention. There is the part of the business in terms of how much it is leveraged, how much debt it has acquired. Remember, we're coming up on the one-year anniversary of, tomorrow is the one-year anniversary of them buying the Odessa online auction site. And when they did, it cost them $2.2 billion, added a lot of leverage there. That's one of the primary reasons the stock was under so much pressure last year. So they are expected to report a loss of $2.28. While the one part of the business is, or the story is the leverage, the other part is what's happening with the used car online retailing. And the easiest way to explain this to people of the pressure that Carvana faces is that last year, when used car prices were at record highs, Carvana bought a lot of vehicles. Well, what's happened to those used car prices since then? They have fallen off dramatically. So as Carvana has sold those vehicles, it hasn't been easy to make money on those vehicles. You don't have to be a rocket scientist here, Kelly. You buy high, you sell low, you're going to take some losses there. So those are the two parts of the business that are going to get the most attention.
Yeah, good. Excellent breakdown. Carvana, there's the long-term chart there. Over $300, Quint, November of 21, and under 10 now. Would you buy it?
No, absolutely not. This is our third time talking about this stock. each time I say the same thing, and then the very next day or shortly after an announcement that they're not going out of business, the stock has a huge short squeeze and then ultimately falls and continues to go lower and lower. These are the two numbers you need to know. Basically, they're set to lose over $7 a share this year.
Wow.
And they only have $4.42 in cash. They have a tremendous already debt on the balance sheet. I can't in good conscience be a buyer of this name, whether it's a short squeeze trade or not. It's not for me.